So is this the end of free speech? Our First Amendment is freedom of speech, which limits the government from telling you what you can and cannot say. But now we got the president saying the Ministry of Truth, the censorship board, which is now being appointed to do exactly what the First Amendment protects us from. Folks, in these times, you don't have freedom of speech. Your freedom of speech is gone.
The security of this nation depends on complete and total compliance.
And now they're trying to go one step further, and I gotta tell you, it seems perfectly timed with Elon Musk and him buying Twitter to bring back freedom of speech.
An inclusive arena for free speech is extremely important.
Well, we're gonna dive deep into freedom of speech. We're gonna talk about Elon buying Twitter. We're gonna talk about the FANG stocks falling apart as well as the stock market. I'm Chris Naugle, and this is What Now? What's Next? So by now, you've definitely heard about Elon Musk.
Twitter has been sold to Elon Musk.
Elon Musk.
Elon Musk.
Elon Musk.
Elon Musk.
Elon Musk.
First, he takes a leading share in the company. Then he's gonna take a board seat, but decides, I'm not gonna take a board seat because then I'm going to be limited on how much of this company I can buy. Then he came out and said, I'm just gonna buy the company for more per share than what the company's actually worth. But then Twitter says,
no, we're not going to take this.
Which would defy all the shareholders of the company because it's then depleting them or taking away their ability to make a whole bunch of money. Because when a company is bought for more than what it's actually worth, who benefits? Well, the stockholders benefit, folks. That's exactly who is benefiting from Elon taking this over. And also all of you that want freedom of speech to remain, our First Amendment. So when we actually look at Elon Musk's purchase of Twitter, we really have to understand the way he did it, because it's unconventional in the investment banking world for how most mergers and acquisitions would happen. You see, Elon Musk is using a large chunk of his own money, to the tune of $21 billion of the $44 billion that he's buying Twitter for. He's using his own cash. Find me one other company that was bought and a merger that happened that wasn't heavily leveraged more so than this. You might find a couple, but this is definitely unprecedented. He's using $21 billion of his own money, or what they would call his margin, because he's leveraging Tesla stock. So he's putting it all on the line, folks. And then he's going out and raising the rest through outside sources, which would be your traditional way that a company would be bought. But let's really look into that. This is the second largest buyout in history. And Elon has loosely said what he's going to do. He's basically going to make freedom speech free again. But what he's also said he's going to do, or potentially do, is take the company private, which I think would be great. And here's the reason why. If you look at all the social media companies, although they might have started as a great idea, a great company, but the second they launched their IPO, their initial public offering, that becomes available to everybody. And who jumps in? Those that want to influence. Who takes board seats? In most cases, it's the companies, the hedge funds, and I hate to say it, but the lobbyists or the influence groups that want to control that company. We've seen this on all social media platforms, Twitter included. Now, whether Jack Dorsey actually wanted Twitter to be this way, or depends on what side of the fence he's actually on, doesn't matter. When Elon became the largest shareholder, who was the first one to come up and be like, whoa, that can't happen? That's all right. Vanguard upped their percentage in Twitter stock to be the #1 shareholder. Well, that didn't work out so well for Vanguard, but actually it did, because Vanguard will benefit from the increased share price. The increased share price is $54.20 per share. That is more than what Twitter is actually worth. I want you to really think about that. So Elon Musk is out there doing some good things for humanity. He created Tesla, a car company that makes electric cars, solely electric cars. He was not so much the first, but he was the first one to bring it mainstream. Everybody else is now jumping on board because they're like, wow, Tesla worked. So now GM's going all electric, and Ford and everybody else is producing electric cars, and the government is saying you need to start making electric cars. Hell, pretty soon you're going to have nothing but electric cars unless your car was bought used. I've said this many times. I'm not an electric car guy.
Please tell me this doesn't run on gas. Gas explodes, you know.
Not because I don't believe in, creating less emissions and everything else, but simply because I want control. I want control of my money. I want control of my life. And when I want to get in my car, start it up, and drive somewhere, I don't want someone saying, oh, we shut the power grid down. You can't charge your car. Oh, you don't think that's possible? Folks, it's already happening in California because of the energy crisis and because there's not enough supply of electric. They were limiting how often you can charge your electric car. Well, you don't think that's possible, but it's already happening. But you know what? When I get in my V8 engine and I start it up, number one, I get that awesome V8 sound. But number two, all I need to do is make sure I got gas in the tank and I'm going somewhere. Watch Mad Max. Remember the old movie? Yep, those cars were still running on V8 engines. Anyway, getting off of that, Elon's creating electric cars, which are making it a cleaner planet. Then he's creating companies like SpaceX to pioneer space exploration. Really, I think he's doing it to someday give us a way to get off this planet when we decide to destroy it, which we're going to cover that too, because it sure looks like the US is trying to force us into a war with Russia. How do you think that's going to weigh? Not very good. Before the government shuts down freedom of speech, subscribe to this YouTube channel and click the alerts button. All right, back to the regular program. Gosh, I don't even know how to go into this, but when presidents start to lose popularity, they start trying to find ways to buy votes. What is the newest thing President Biden's going to do? He's going to erase all of the student debt out there, right? So if you went to college to get an education to make a better living for yourself, now all of a sudden he's saying, hey, we're going to erase your debt. Folks, I'm going to tell you something you might not like to hear, and if you don't like this, piss off. The one thing I will tell you is nothing in life is free. And the people that get things for free, they don't value things that are free. They value things that they pay for through money and time. Now, although the people that went to college, that they invested their time, which is great, but if they know they can go to college and the government's just going to pay off their student loans, are they really going to value their education? Or are they just going to say, well,
the government paid for it, so I guess I got to vote for this side so that they continue to give me free things.
Nothing in life is free, and things that are free, you don't value. Look around. What do you not put enough emphasis on that are the most important things in life? Number one, love. How often do you go out there and tell the people that you love them? Not enough. There's so many things that you do and can do for free that you don't put enough value on. So now all of a sudden they're trying to buy votes. And you know what I'd say? That is the end of democracy as we know it. When politicians and lobbyists find ways to buy votes so that they can get what they want, control the narrative, and be in 100% full control, but yet then again, have those debts paid off with you and your tax dollars.
Oh, but Chris, I make less than $400,000, so my taxes aren't going to go up.
Really, asshole? Look at the gas pumps. Look at the grocery stores. You don't think your taxes went up? It's called inflation, you dummy. Your taxes are going up. You're just ignorant and living under a rock because they already bought your vote. Like it or don't like it, that's the truth. So now they're going to buy some more votes by saying they're going to erase all that student debt. Do I think that's a good idea? No, I think it's an absolutely horrible idea. If you go to school and you rack up some student debt, go work your ass off and pay the debt off like the rest of us had to. Because anybody in the past that went to college, they had to work their tail off, sometimes 2 or 3 jobs just to pay that student loan off. But you know what? When it's all paid off, they look at the value that they got out of that, and that's a good thing. Believe in college or don't believe in college, people that pay for things through time and money put value on it. Let's switch gears here. Because we all know that the Ministry of Truth, the censorship board that Elon Musk tweeted and said, that's messed up. Sure it is. But let's talk about another messed up thing that all of you should have saw the writing on the wall, and that is the stock market. How's that looking these days? Everybody said it's going to the moon. Well, they said the same thing in 1929 before the whole kit and caboodle went down to the Great Depression. They also were saying the same thing in 2007 before the Great Recession happened. Everybody said,
Oh, it's going to keep going up. These property values are going to keep going up. My stocks are going to keep going up.
that didn't quite happen either. Well, it's not going to happen this time. Because whether you believe it or not, whether you think buy and hold is the answer to all of your problems, a recession is coming. And I'm not the only one saying it, but I might be one of the only ones that's been saying it for a few years, like a broken record. Go back 2 years ago, watch my podcast, where I absolutely predict that there's a recession coming because we are entering the end of the short-term debt cycle, the end of the long-term debt cycle. In just pure economics, it was the end. There's no way the markets can keep pushing up. They never have, and they never will. But people are short-sighted. They forget what's happened in the past. They don't study history, and they probably slept through history class when they went through it in high school. In college, did you take an economics class? Probably not, unless it was mandatory, and you probably cheated your way through it. Can you actually explain to me supply and demand? Can you explain to me what inflation is? If you can't, you didn't pay attention. But there's a lot of people that do pay attention. There's economists, they're paying attention. Hedge funds and analysts, they're probably paying attention too. And the people working for the government trying to predict what's coming, yeah, well, that's why they print so much money, because they know it's coming too. The only person that doesn't is the majority of you. They keep plowing money into the markets thinking it's going to the moon because the Uber driver or maybe your Lyft driver said, oh, you should buy this. You should buy this altcoin. Maybe you should buy this stock. It's going up, up, and up. Well, let's really take a look at how things are actually panning out in 2022. Because if we go back to December 2021, and let's just focus on the stars, right? The best stocks you can possibly own. The ones that never could go down. They're too big to fail. They call them FANG. Facebook, Amazon, Apple, Netflix. Ever hear of any of those? Well, those are some of them, and let's not leave out good old Google, and that makes up FANG. So let's look at how those stocks are doing since December 31st, 2021. First off, Amazon is down 13%. Well, that might not be too bad, but for a company so big as Amazon, and for every one of you buying most of your goods and services from Amazon, why would their stock be down 13%? Moving on. Facebook? Meta? How could Meta be down? Well, it's down 45%. Well, that could be because people are sick of censorship. They are sick of just being told what to do and what they can and cannot do, so they found other platforms. How about our all-star Google? When you want to know information and much of the stuff that we learn, we go to Google and we type it in. So we are heavy users of Google. Google, as of December 31st, is down 17%. Netflix? We all turn on Netflix, right? Remember, Netflix was like the one that was making all the money. Everybody in every pension should have Netflix. Well, they're only down 64%. How you feeling now? Well, you might be saying,
Well, Chris, I invest in the S&P 500. You got to do the indexes. Don't pick those individual stocks.
yeah, that's down 13.2%, and it will continue to slide because that 13.2% I just told you is old news. Folks, the whole thing's falling apart, and it will continue to fall apart. There might be a couple more blips, but then it's going to go down because we haven't even seen the first leg. The first leg in this drop, in this coming storm, is going to be in excess of 50%. Mark my words. I just know charts, folks. Support and resistance levels. If you look at them, you will see when we break through this level, we're going down to probably more than 50% losses. Can you handle that?
Oh, I'm in it for the long haul, Chris. Yep. Anybody that invests for the long haul, just like Warren Buffett said in their newest meeting they did, we invest for the long haul.
I get it. And they're absolutely right. Nobody that's invested for longer than 100 years has lost money. Heck, you could probably say the same thing for 20 years. If I invested in the S&P 500 for 20 years, your chance of losing money is minimal. But here's the problem, folks. You see, most of you can't weather a storm. Most of you can't weather a recession and hold in for the long haul because of fear. They call it investor sentiment, but let's just get down to it. It's fear. If any of you remember 2008, even the die-hard investors, when they got to about 30 or 40% losses, they had to cut their losses. Why? Well, not so much because they don't understand that investing for the long haul is the right way to do it, and it is, and I'll cover that in a second, but it's simply because of fear. Where's the bottom? When's this thing going to stop? Should we just cut our losses now? You've asked yourself this many times. Heck, you're probably asking yourself this right now. And it will get worse, and when it does, some things will happen that will drive investor sentiment to be fear. And here's what will happen. When this whole thing lets loose, companies will start laying employees off. Heck, you're already hearing about it. Lots of banks are laying people off. Well, Twitter's certainly going to lay people off because Elon said, hey, one of the things in the business plan is we're going to lay some of these 7,000 Twitter employees off. And rightfully so. He knows how to run a business and he's proved it. Maybe that's a good thing. But your chance of getting laid off in a recessionary period goes up tremendously. So let's just assume you're in it for the long haul. You've got your money in that qualified retirement plan, that trusted 401k that you so love and you max out every year. Now all of a sudden the market drops 40%. And you look at your statement, because you never really look at it. You just get your quarterly statement. You're like, oh boy. You get scared. And then in the mail or in your email these days comes the notification that you're being laid off. The company's downsizing and you're being laid off, but it's a recessionary period. There's not a lot of companies hiring during that period. So what are you going to do? You're just going to go out and get another job? No, you're probably going to go get a job that pays you less money, just like people did in 2008, 2009, 2010, 11, 12, 13. Shall I keep going? That's right. People took less money just to maintain an income. And many of those people had to downsize their homes. Many of those people had to go from their lavish house to an apartment. Many of those people had to sell cars. They had to sell belongings. Oh, I'm sorry. They had to sell their stocks, their mutual funds, their ETFs. Why? Because sometimes you have to understand that certain things are more important than the long-term investment gains that you promised yourself. You were a long-term investor. Things like food and shelter. Well, maybe you need a car or transportation. Yep, so that would come before that trusted 401k that's down 40%. So you got to make some decisions.
Well, honey, we're going to have to take some money from the 401k. Honey, we're going to have to sell those stocks. They're down 40%, but we don't have any other choice.
Investor sentiment's the most powerful thing, and you just, for some reason, don't remember what happened in 2008 or what happened during the dot-com crash or, heck, what happened in any other serious recessionary period, except for this one's going to be worse. It's going to be worse because it's going to mimic all of them combined. So take the Great Depression. Take the dot-com crash, which you're already seeing NASDAQ slide and your trusted FANG stocks slide. So take the dot-com crash and then sprinkle in a little bit of the 2008 Great Recession. And that's probably what is on its way to a theater near you. And the theater near you is called your qualified retirement plan, that trusted brokerage account. Oh, yep, that crypto account's probably going to take a big old hit too. Warren Buffett in the meeting said exactly why he doesn't like Bitcoin. And one of the things is, how do you value it? There is no intrinsic value, and there is some merit to that. Whether Bitcoin and Ethereum and all these other altcoins and everything else are going to be around in the future, I would say yes, it's going to be around. But is it going to continue to keep going up? Nope, it's going to go down because all of the cryptos seem to be correlated to the stock market. When the S&P 500 goes down, what else is almost certain to go down? That's right, your crypto portfolio. And then when the S&P 500 bounces back, what's likely to go back up? That's right, your crypto portfolio. Was that what it was designed to do? Is that what people said it was going to do in the early days? No, it's not going to be correlated to the markets, but it sure is. Makes you think, what could that be? Well, could it be investor sentiment? Because investor sentiment works both sides of the fence. When the markets are up, it's called FOMO. Your fear of missing out.
Oh my God, honey, we gotta buy this because we're missing out.
And then on the other side, it's called fear.
Oh my God, honey, we gotta cut the bleeding. We gotta stop the bleeding and cut the losses.
Folks, wake up. I might be the person bringing it to you this way, but you need to seriously wake up And you need to understand what's happened in history will happen again and again and again. The thing is are you prepared for this? Are you prepared right now for what just happened? Because when you look at your statement, how does that make you feel? Some of you might say, I'm not affected by a 13% loss. This is just normal. You're right. But add a couple numbers to that, okay? What if it was 40% down? Would you be saying the same thing? These are the questions you got to plan and prepare for today. Because if you're only down 10 to 20% now, no big deal. That could bounce back. But are you okay if you lose another 10 to 20%? If you're not, you better really start making some preparation and planning for this. And I want to hit one more topic. This is a wide topic that we cover every single episode, and it's inflation. Inflation is a hidden tax. Inflation is not that things get more expensive. Inflation is your dollars buy less. That is correct. The dollars that you go out and you work for, these things right here, they're just worth, they buy less. The purchasing power goes down as they print money. That's essentially what inflation is. It's a hidden tax. You see it at the grocery store. You see it everywhere you go. You need new tires for your car? Yep, those are going to cost you more. You need a new belt for that vacuum cleaner? Yep, that's going to cost you more. Everything costs more. But it's not that they cost more, it's that your dollars buy less. That's the most important thing to understand. So right now, I got to ask you a question. If any of you are keeping large sums of money in bank accounts, in CDs, in money market accounts, because you're just waiting it out, you really need to take a close look at that and say, why would you ever keep money in the bank? I'll tell you this, the bank is making your money work for you because you gave up control of it. It's time for you to take back control of that money. It's time for you to start understanding how you can beat inflation each and every time by mimicking what a bank does every single day. And what does a bank do? You have been coerced into going in and giving the bank control of your money. You make deposits with the bank, and they pay you nothing right now on those deposits. But what do? They turn around and they lend that money out. Now, the Fed is raising interest rates 7 times. The next increase will be 0.5%. And when they raise interest rates, the bank raises loan rates. So now if you need a loan, a line of credit, a mortgage, a car loan, it costs you more money, doesn't it? But are they paying you any more? Not yet. So if it costs you more, who's winning that equation? You or the bank? The bank is. Because the bank is making your hard-earned dollars that you worked hard for, these things right here, the bank is making this money work for it. And the bank just got a raise. And we'll get 6 or 7 or maybe 8 more raises this year alone. While you get how many raises? Probably 0. It's a losing proposition. But I've got a solution for you. You can take control of your money. And it's very simple. It involves changing just one thing. And you know what, folks? I got a great video that shows you exactly how to do this. So check out this video about the infinite banking concept and how you can be the bank. Folks, I hope you enjoyed this episode of What Now, What's Next. We'll see you the next time.